I'm Nicolas Véron. On behalf of Bruegel, it's my delight to introduce this panel on financial services. And to discuss financial services this year, we felt it was a good idea to take a step back, think of what has happened since Brexit and the opportunities that have been seized or maybe for some of them missed by the European Union in terms of getting its financial act together. Of course, this can look like a second-order issue given what is facing the world these days and what was indeed being discussed by Kristalina Georgieva, Jeroen Zettelmeier, and Guntram Wolf in the previous session. Europe has war on its grounds, even so it's not on the territory of the European Union. And finance is not at the center of this, and especially Brexit is not at the center of this. So our panel can look a little bit like inherited from a previous era, especially compared with the competing panel happening at the same time on geopolitical disturbance. Nevertheless, we think it's an important issue to discuss and ultimately related to the ability of the EU to thrive and also ultimately maybe also to defend itself in a difficult global environment. So for that, we're very grateful to our panelists who have accepted to participate all in person in this conversation. Alexandra Jur-Schröder joined the European Commission in 1996. She's been the Deputy Director General of DG FISMA in charge of financial services since last year. Before that, she had worked in several economics ministries, including in Germany and the UK, so that's the perfect preparation to be a Commission official, I guess. Margarita Delgado has been the Deputy Governor of the Bank of Spain since 2018. She has worked at the Bank of Spain since 1989, so we have three panelists who have a lot of experience in their respective fields and organizations. I should mention also that she has been for 4 or 5 years, from 2014 to 2018, at the staff of the ECB Supervisory Directorate, single supervisory mechanism, which illustrates, I think, the kind of new patterns of career in banking supervision and central banking more generally, with this interplay between the European level and the national level. And Andrea Cironi is chairman of Generali, which he became this year, but also very experienced scholar in finance with experience in the financial sector as well. He has been at Bocconi University in Milan since 1995. Professor of Banking and Finance. He's also been the rector of the university in the mid-2010s, and also a lot of experience in the private sector in different organizations, Intesa Sanpaolo, UniCredit, the London Stock Exchange. He was the chairman of Borsa Italiana before taking over the chair of Generali. So enormous elements of experience, both quantitatively and qualitatively on the panel, and therefore I should directly hand it over to you, Alexandra.
Yes, Nicolas, thank you very much for inviting us today. I'm very happy to see you all. It's my second day after holidays, so I still need a bit of time to get back to professional life, but I think that applies for all of us. You said in your introduction that finance is not so much in the focus for the moment in Europe, and maybe that's a good news, because if you get into the focus, it would mean that something maybe is not so well done as it should be. So for me, it's more an encouraging message that for the moment, even in these very difficult times where we are still somehow going out or still staying in a worldwide pandemic, that we have a war at the door of the European Union, our financial markets function quite smoothly. That's, I think, an encouraging message I wanted to start with. But on the other side, I think it's also important, that's I think why we are here this morning, that there is maybe no room for complacency, saying everything is perfect, everything goes well. But indeed, I think as operators, financial institutions, but of course responsible policymakers, we certainly see a number of things in the financial sector where we could possibly not say that we have reached our goal to have a fully fledged single financial market. The Brexit is an important element in the title of your panel today. But for us, this has been, of course, a somewhat disrupting event. But the overall goal that we, as a European Union, have to have a much more integrated, harmonized financial market if we want to compete internationally, if we want to serve the industry, has certainly also be already there before we had to face the Brexit. So I think it would be nice today, but I will come back to that in our discussion, that we look a little bit where we are, especially on the banking side, but also, and this is very close to my heart, where are we in Capital Markets Union? Are we satisfied with what we have? Let's discuss, but I don't think we can be completely happy, but we are making progress. But I think this is certainly something I would also like to exchange views. And there's another element that was perhaps not so obvious and visible when the Brexit happened, that is the new challenges that are coming up for the financial sector. And I am sure you know what I'm talking about. First of all, digitalization, how we work to get up the opportunities, but also to avoid many risks that are there. And of course, and then I'll stop for the moment, everything that is sustainability. I think that's becoming even more important now with the war, with the energy crisis we are going into in the European Union. How can we also use the financial sector to finance a lot of investments we will need, even more now with the gas crisis in Europe. So I think these are lots of things we have to discuss.
Margarita?
Thank you, Nicolas. Good morning all, and it's a real, of course, honor to be here in this very beautiful building in an in-person meeting. Just to be very brief, I mean, for these 2 or 3 minutes of glory that you allowed us to put into the audience today, let me just recall what is let's say, the headline for today. Did the EU miss the opportunities after the Brexit in financial services? Well, maybe we should, as you said, take a step back and look at what it was over there around 2016. I remember it was on the 23rd of June, the day of my birthday. So, and I was there at the ECB at that time. So, were we perfect at that time? Definitely not. In terms of course, market fragmentation or more integration, more integrated financial markets, capital markets, or even the banking union. So, I would say that today we didn't totally miss the Brexit opportunity. I wouldn't say that this has been lost. Rather, I think that the challenges and the opportunities that we had back in 2016-17 remain, some of them remain, and need to be addressed. And probably this is the right time now to address these hiccups. Let me just maybe reflect on 3 or 4 big main points. First of all, it is the starting point, is that a problem that we haven't met all the expectations. Was it too ambitious at that time? I mean, I've read your figures of the time. Maybe we haven't, of course, met or fulfilled all the figures, or the reality is different, but why is that happening? My second point is that although in some segments in the financial industry we've already achieved a lot, I mean, in other segments the progress is more limited. But why, again? Is this happening because we have, let's say, a very fragmented financial system, and we have maybe 7 big champions, national champions, indeed. Well, in France we have 3 or 3.5. In Spain we have 1 or 1.5. In Germany we have 1 or 1.5. In Italy we have 1 or 1.5. So too many halves and too many ones. So, indeed, the development in some markets in the EU is not as something that we can really fix very quickly, because we have a very too fragmented market. Well, that was my first reflection. Secondly, on the positive side, Nicolas, what have we achieved? We have achieved, honestly, very honestly, the SSM. We have achieved the SRB with all the problems and difficulties, but it is there. And what is missing? Okay, the third pillar. The third pillar is not coming in the near future, but maybe we need to explore the different ways to really compensate this lack of EDIs, right? Third, should we compare ourselves with the US market? Well, we tend to do that comparison, but it's very, very difficult. They are a country, we are not. They have a fiscal policy we don't have. They have a different business model for the banking industry, and we have a variety of business models. So maybe the comparison is not that perfect, and we are, I mean, really cheating ourselves, right? So first, in my view, we need to really do our homework and really integrate our market, and then we will be able to compare ourselves with the US market. My third point is the market fragmentation, which probably you will like to address this issue later. And finally, maybe what can be done to mitigate these hiccups. How can we really complete the banking union? How can we really take decisive actions, such as EDIs, to facilitate somewhere in the future EDIs? So those are really a big questions that need to be addressed, and I haven't seen them yet. Thank you.
Thank you. Your point about the ambition made me think of this engineer's joke that, you know, is it that the glass is half full or half empty? Maybe the glass is just too large. Andrea.
Yes, thank you. First of all, let me thank you for this invitation. It's actually my first time here at Bruegel, and in my past life as a scholar, I read so many papers by Bruegel, so it's really an honor and a privilege. I would actually follow the same reasoning that Margarita actually adopted, which is the title of the session, i.e. whether it's been a missed opportunity, and eventually what should be done to address the deficiencies. Well, first of all, I think that at the very beginning, as you pointed out in your paper, it was very much seen as a threat, but also an opportunity. I think the opportunity has only been partly taken. If we look at relocation as being rather limited and fragmented in some way, and some of the most relevant activity, especially wholesale, have remained in London, okay? So I think that if we look at the European financial markets, capital markets today, we still see a system which is very much bank-based, so there's not much, there hasn't been much development despite the efforts of the Commission, because I think the Commission has done quite a significant effort in promoting the Capital Markets Union, but it's still rather limited, and this, of course, is in some way penalizing mostly the SMEs and eventually also retail investors in the market as well. The market is still very much fragmented in Europe. I think there's still a lot of gold plating by individual national regulators and authorities, which is not really in the interest of the development of the capital markets in Europe. So to sum up, I very much agree with my colleagues. There's been some progress, but there's still a lot to be done. I mean, I'm just touching a few points, then we can discuss it more deeply later on. What I see as areas where more work should be done. And as I mentioned, I think the European Commission has been very committed with, I mean, for example, if you talk about the Capital Market Union, we look at the Action Plan 2020, the 2021 communication and package. I think all the relevant measures are clearly set out. There's probably a need of more drive and more momentum on the part of the member states in this respect. Other issues that I think are rather important. First of all, I mean, taking my perspective as a large insurance company, the revision of the Solvency II regime is very significant to, in some way, free up capital and contribute to the development of the capital market union, and more generally the development of the capital markets. I think here there's clearly some competition with the UK that needs to be monitored closely. Mrs. Strass already highlighted that recently. She talked about MiFID II and Solvency II, and I think that is clearly quite significant for us in the EU. A second point where I see the opportunity to move forward in a stronger way is to parallel what has been done for the banking union, which I agree is not complete yet, but at least very significant progress has been done, especially with the SSM. And we don't have something like that in the insurance industry, just as we don't have a real, let's say, capital market supervisor, European supervisor. I think in that respect, I can clearly see that from the Italian perspective, but in many other countries you have this gold plating, which is, and there is this intense competition which, I mean, competition is something that I've always seen positively, but I guess the principles underlying European integration have been mutual recognition and a minimum harmonization. I think we need stronger minimum harmonization in the area of securities markets. There is, by the way, an opportunity because in some way the Euronext group that now also has Borsa Italiana is the largest capital markets in Europe. It also has been promoting a lot growth markets for SMEs and so on. So I think a stronger European authority with more power, so strengthen, if you want, the role of ESMA, I think it's another opportunity, just as I see that for the insurance industry, which I think it's very important. Well, there are other areas, but I think I would risk going on, so I would stop for the time being here, and then we can proceed in our discussion.
Thanks very much. Thanks to all also for your time discipline. Margarita alluded to that. I had insisted that we keep the introducing remarks relatively brief because we want to have interaction with the participants in the audience, but also with participants online. As you know, online participants can ask questions on Slido, sli.do, and we have all the instructions on the Bruegel website. Let me also mention something which is perhaps obvious but maybe worth recalling, which is that Bruegel now, since Brexit, is an organization that works on policymaking in the EU, but also with a strong view from the UK. And indeed, the UK government and the Bank of England are still in our membership exactly as they were before. So even so, the topic of this panel is very EU-centric. We also think of what might be the right policy choices from a UK perspective. But there is this element of competition, it's out there, and I think it shouldn't be avoided for the sake of avoidance. Alexandra, I have a couple of follow-up questions, and then we'll take more questions from the floor. Andrea mentioned the nagging issue of market supervision, and there has been a discussion a couple of years ago on the ESA's review. I think the Commission made that choice of bringing all ESAs in the same review, which in a way was the mandate it had from previous legislation, but we also know that the issues and challenges and opportunities are very different. If you look at EBA with the SSM next door, if you look at the EIOPA with the context that Andrea reminded us, and if you look at ESMA, which is the Securities and Market Supervisor, and is really front and center when it comes to Capital Markets Union. So I know there has been a lot of despondency or cynicism or nihilism out there along the lines of, we completely failed, we being a collective. There is no way there would be a consensus on making ESMA a true authoritative, effective, independent supervisor. I'm not saying it's not independent now, but you understand my point. And by the way, for disclosure, I'm an independent board member at the trade repository arm of DTCC, which is supervised by ESMA in the European Union. I should mention that. So is there hope? Is there a possibility of getting closer to the visions that Andrea outlined, especially in terms of market supervision?
Yeah, thank you, Nicolas. Maybe I can say hope dies last, as we know. And maybe also taking a step backwards, and certainly most of you know, I think from the Commission's perspective, we see a lot of merit in centralizing supervision powers in one authority, and Maria was also mentioning that I think with the SSM we have a very good example that it works. We maybe don't need it for each and every, I mean, it depends a bit on the nature of those who should be supervised. But that was a bit the way we were coming from. But we will also know that with the ESA's review, there have been other views, especially in member states. And okay, I mean, Maria also said it. I mean, we are a sort of group of 27 independent member states. We are not one jurisdiction, and this is also, I would say, natural that you have a bit different point of views, and giving up power is not the most easiest thing to do. So in the end, to cut a long story short, the ambitions we had that we give more powers to ESMA, but maybe also to others, did not really materialize. But for us, it is at least important that with the system we have now, we can do better than we did in the past. Of course, if you have more players around the table, we all know this, it's not so easy if there is one supervisor who takes decisions. What I see is very important is that with the ESAs we strive what we call supervisory convergence. That means that there is a lot of need to compare, to take notes, to coordinate. For the moment, to be very frank with you, I don't really see a lot of appetite in our negotiations to make ESMA the EU supervisor. I think there is also a need to be a bit realistic. I mean, it makes no sense that we spend a lot of time and efforts for a goal you politically see is not the right moment to achieve. But again, don't take me wrong, it's not seen that we have given up. I think it's a process. We have to see how it works. We have to collect evidence, what works, but maybe what does not work so well, also to perhaps make the case and saying that here things would possibly be different with a supervisor that is a little bit more European than what we have now.
Pretty bleak outlook indeed. So a follow-up question is, you framed it in terms of giving more powers to ESMA. Is it the same ESMA? In other words, is ESMA fit for purpose as a supervisor? And of course, I'm emphatically not speaking here as a board member of a supervised entity, but only as an outside observer. Is the governance and financing framework of ESMA sufficient in terms of making it an independent, effective supervisor, as the way, say, the SSM is? The SSM is funded by a levy. The SRB is funded by a levy. The SRB has a decision-making process that relies on a compact board. The same is being discussed for the future AMLA, the Anti-Money Laundering Authority, which DG FISMA is also shepherding through the legislative process. By contrast, ESMA is financed by a donation from the EU that has to be discussed every year, so a much more political process, and it is governed by a board of supervisors in which its chair doesn't even have a voting role. So is that right, or should there be a reform of ESMA before it is given more power?
Yeah. Nicolas, you're absolutely right, and my answer on that would be form follows function, as we also use in architecture. I mean, if you want to have a powerful, independent European supervisor, you have to create the governance structure from start, knowing what you want, and then you let this body work. But you cannot do it the other way around, saying we have ESMA as it is, and I mean, I value a lot what ESMA is doing, and I think they're doing an excellent job, but in the way the competences and the governance structure they have for the time being. So I don't think we could use the ESMA we have today, saying, okay, ESMA, but now as you are now becoming our EU supervisor for markets, but we would need another reflection, take a step back and see what can be done. I mean, you mentioned AMLA, of course this is a different nature, but it's also a bit the first time we do, when we have the SSM, but still for the AMLA, I think that will be a good showcase also to see how it works. Is the government structure, we are still negotiating with Parliament and Council, of course, is that right, to see how it works? Again, I think it's a long journey. It's not something I would say we will have in the next few months, but also to see from this agency, can we maybe see that it really makes a difference, another step forward, and could that perhaps also be something we could use for market supervision?
Margarita, you gave us your take on, you know, the glass half empty or half full. If I look only at the banking sector, obviously a big point of attention has been cross-border mergers. And the ECB, for a number of years, has been vocal about it. I remember speeches by Vitor Constancio already a number of years ago, and making the link, not just to create European champions, that's not the point. The point is to make the link between the initial ambition of banking union, which was to break, as the leaders of the Eurozone famously put it, to break the vicious circle between banks and sovereigns, and this issue of cross-border mergers, because as long as banks are primarily national, this nexus of banks and sovereigns will remain, and the main way in practice that banks move across borders is through M&A. I've looked at the list of significant institutions when you took over, Margarita, as the initial team of the SSM, so back in 2014. There is only one of those 100+ significant institutions that has been the target of a cross-border merger in the Eurozone. That's BPI in Portugal that was purchased from Spain as, in a way, a consequence of the Portuguese crisis. So clearly not a lot, including if you compare to a similar time period, 5 years before, 10 years before. So the ECB, as I said, has been calling for more cross-border mergers and more recently for branchification across borders. I'm going technical, but most of this audience knows what this is referring to. Why is it not happening? Can it happen without a European deposit insurance, or will nothing happen without a European deposit insurance? How do you look at that?
Well, thank you for the question. Very easy, of course, to answer. Well, in my view, there are several factors. Part of them are, let's say, regulatory, legal framework, more customer-based, and let's say practices in each and the different local areas. But in my view, the big real topic is whether there is a business case and whether there is a kind of a good and profitable business plan. That is the real thing. If we look backwards, when we've had interest rates in negative territory for 5 or 6 years, I mean, the only option to grow and to remain profitable is, of course, to reduce costs. And cross-border mergers, I mean, indeed, in my view, generally speaking, for the business model on average, of course, I mean, this is, I mean, to answer very precisely to your question, we will need some figures to support my argumentation, but, I mean, generally speaking, broadly speaking, for the average business model of the banking industry, I think it was not profitable. The only way to make a cross-border acquisition profitable was to reduce costs. It was cost-efficient options, right? So very difficult. You have your IT systems, you have new investments for digital, you have to cover, I mean, the new sustainability requirements, you have different business models in the different countries. Sorry to say that, but a mortgage in Belgium is not exactly the same as the mortgage in France, because there is a totally different legal framework. So for a cross-border bank, it's very difficult to make profits in mortgages, I mean, just crossing a border. The same in Spain, the same. So the question is whether there is a business case or not. Of course, to answer to my question, you have different dimensions. But one very clearly is the, let's say, rather flat and really gloomy perspective for profits. Maybe we will change now. To the contrary, what we have seen over the last 5 years, 6 years, is, let's say, segment and businesses merging. For instance, we have witnessed some acquisitions cross-border between France, Spain, Italy, and so on specific, very specific products, right? It could be CIB, or it could be custody.
Corporate and investment bank.
Corporate and investment bank, CIB, corporate and investment banking, or custody, or something linked to the markets, right? But for the, let's say, the average people, the ordinary people like me, it will be very difficult to see a real cross-border acquisition beyond what is really products. It's a factory. Products that can be sold anywhere without any limitations and subject to less local restrictions.
But there is obviously also a political dimension, right? We see that in the Italian election campaigns. Fratelli d'Italia is making a lot of noise on Crédit Agricole, buying some, raising a stake in Banco Popolare di Milano. And so do you think, ultimately, let me frame the question that way, if the business case is there, can the political obstacles be overcome?
Well, that will contribute, definitely, if there is a business case. Again, I mean, if Crédit Agricole, sees opportunities in the Italian market, I think this is great from a political perspective. This is really great, I think. But of course, there is a business case. Probably the managers have seen the opportunity to make that bank profitable and to enter in that market, because they can really earn additional money. But without that, the banks are not charities, honestly. So they will not enter into a deal that will be for nothing or for losing money.
Andrea, any comments on that case?
No, I very much agree that it's going to be tense. There's going to be some political discussions. But I very much agree with Margarita. At the end, banks are private firms. They are in the business of creating value, so they need to reason that way. If I may come back to Alexandra's point, I think that there is a lesson that should be drawn by the banking union, which I think is the following. At the end of the day, the whole process, which is not complete yet, but it's been going on for quite some time, I think had three features. First of all, it was gradual over time. Second, it was selective. It only concerned the largest banks so far. And I think that's very rational, because there are very different competencies and expertise on the part of the supervisors as well. And third, it was involving the national authorities. If you think about the JSTs, they are, mixed of...
Joint supervisory teams.
Exactly. So I think the same approach should be followed. First of all, in the insurance industry. Because when you think about AXA, Allianz, or Generali, the kind of supervisory competences, expertise are very much different from the ones of... and it's also more politically acceptable if it's gradual over time and if it is engaging. Because at the end of the day, sorry to say that, the national authorities are in a market themselves. They're competing for a market share. If you steal the market share, then, And I think the same kind of reasoning could be done for securities markets. Think about a company, a listed company which has more than 10 billion, 20 billion market cap. The kind of tools, competencies, and expertise is different from a 100 million company which is listed in a growth market. Now we're seeing growth market companies which raise 10 million. So it's completely different, right? And I think I mean, of course, I'm not into the discussion, so I'm probably underestimating the political problems, but that, I think, is... and on the point that you made at the very beginning on the UK-EU relationship, I think, as I mentioned implicitly, that indeed there is competition and it's sound, and we should be aware of that. But I don't see necessarily, so to be frank, I think that the postponement of the clearing activities, let's say, missed recognition of the UK CCPs. As you know, it's been postponed to 25 before clearing activities, for example, clearing of euro derivatives and so on, gets back to the, let's say, EU. I think that was very wise on our side, because the pool of liquidity that we have in the London market, it's not something you can replicate in 1 or 2 years. It's something that takes a lot of time, and still, I think about 80% of the clearing activities of euro derivatives are actually realized by UK CCPs, mostly LCH. So I think, so I see complementation between the, but clearly at the end of the day, we're also competing.
As an observer of the financial system, and also, of course, as an insurer, how do you see the competition moving, right? I mean, there is this element of competition between the UK, the EU. The UK actually has a debate right now on whether regulators should have competitiveness in their mandates. There is a question from the audience about that. I guess it would be far too simplistic to ask a question like, you know, who's winning, but how do you see, maybe what has surprised you in the competitive dynamics between London and the different EU financial centers since 2016?
Well, in some way, the relocation in Europe has been rather consistent with expectations. I mean, there's been not a, move towards just one center. There's been, probably 4 or 5, Dublin, Frankfurt, Paris. There's been a kind of specialization among these centers, which is, again, consistent with expectations. I strongly believe that a more liquid and integrated capital markets in the EU is a very significant tool for the growth of our economy. And when I mentioned at the very beginning that we're still very much bank-based, which has a number of advantages, and I'm not saying, but I can see that in, it's part of the culture as well, because in Europe, in continental Europe especially, we are more risk-averse, we tend to be more prudent. But I can see the disadvantage also from my, I would say, university experience. I mean, you see young entrepreneurs that try to raise fund in Milan, and at the end they have so much problems that they go to London and easily raise 10 million in venture capital. So there are a number of initiatives that we need to promote, and it's been very well highlighted by the Commission in the recent years, to promote the efficiency and the competitiveness of the European economy. And I don't think it's something that we should, let's say, put aside because we're now facing so many challenges and problematic times. I think it's one of the key issues that we still have to address. So I very much believe that.
Alexandra, I mentioned this debate in the UK raised from the audience on competitiveness mandates for regulators. And let me connect it maybe an outrageous provocation, but with what you referred to as, the green transition, the role the financial system plays there. There are voices in the financial system saying that the Commission is coming with a lot of initiatives which create a lot of burden of reporting and systems and, and uncertainty in terms of compliance with legislation. Do we need a competitiveness mandate for EU regulation and supervision? How do you look at that?
Okay, maybe before I answer your question, let me make one more remark to what Andrea said. And I think because he made a very quite very important points. When it comes to, okay, our EU legal system for financial services and what will happen in the UK, I mean, I think for the moment the UK is still applying EU law. I think this is also something we should keep in mind, but of course there are a lot of activities now, and we will also see what comes with the new Prime Minister, what will happen. And I think healthy competition is always good. I think we will do what we think is the best for the European Union, and I think it's fair to say that the UK will see what they can do, but as we all know and used a lot in finance, the proof of the pudding comes with the eating. So I think we also have to see how the new UK rules that will of course look much more into the regulation of the agencies, but whether in the end it will work or not. Then I don't think we have to be afraid. I mean, one really serious remark is that we should not fall into the trap saying, because we have, and it's true, we have quite heavy legislation on finance in the European Union, but we also know why we have it. And now to say, okay, the UK may deviate a bit. I mean, I hear a lot and I read a lot about competitiveness in the UK, but I haven't really seen how it looks on paper. So I think this is also something to look into. But I don't think it would be wise for us if we completely reverse our thinking and saying it has been far too burdensome, so let's do something going back to the old days before the financial crisis. I'm not saying that sometimes, of course, you can discuss how burdensome regulation should be, and I'm also not a big fan of gold plating, I have to say. So maybe regulations at the EU level would be better, because then it goes for everybody. Sorry, but you had asked me a different question, Nicolas. That is more on the sustainable side. I mean, for that, I think the big opportunity is that we are all faced with a completely new situation we haven't had a couple of years before. We all face the same problem: climate change, big challenges to master energy supply, and how do we do that? And I wouldn't say that there is a masterpiece. I mean, we are trying it in different ways. I think first of all, we try to work more with disclosures. Of course, the question in the end is how much you have to disclose, what is the system, and of course we have also this sort of classification of catalog, the well-known taxonomy. Other jurisdictions are not yet there where we are. I think this is, I would say, a good sign that we are not always the first, but at least I think in this area we have taken decisions and activities much earlier. I mean, I don't want to be misunderstood that I feel that our legislation is too burdensome. I think we are in a process to see what needs to be done, because this is now a very exciting topic. There is a lot of interest in the investor parts, in the companies, so there is a great opportunity. But our challenge is how we can explain what is a sustainable product, what is a sustainable financial product, and you cannot simply say because it is this or that. So I think when it comes to the details, we have to be quite specific. What we try, maybe we can discuss it next year again, where we are, because the market hasn't really started. I mean, the market is starting, but there we also will have to see and have a critical look whether what we do is the right way to do. So a lot of challenges ahead.
Margarita, coming back to the UK, well, you're now in Spain, but as I mentioned, you spent a lot of time in the SSM and you participate in the life of the SSM, because that's now how banking supervision is organized in the Eurozone. SSM, of course, being the single supervisory mechanism. I'm the acronym police. So how do you see the UK the international banks' adaptation to Brexit? Banks that had a lot of activity in the City of London that have to reshuffle that to a certain extent. There was this desk mapping exercise by the ECB last year, which was jargon to make sure that if a bank had some front office in the Eurozone, it needed to have the required back office and middle office also in the Eurozone to have proper risk management and governance, if I understand it correctly, but you will correct me if that's wrong. Where is that going? Where are we in that transition? Is it over? Is it just starting? And how do you see it developing going forward?
Well, I think, first of all, we need to acknowledge that some certain banking activities have been reallocated without any kind of noise, right? I mean, any relevant disturbance to the EU, indeed to the EU market. On the one hand, some activities, as Andreas mentioned, have been reallocated to some hubs, well, maybe specialized hubs such as Amsterdam or Dublin or Luxembourg or Paris, Frankfurt, of course. So I think that we are now a new home for some banks, from some incoming banks, right? But nevertheless, of course, the city still is the big relevant hub in the world, I think, for financial industry. That remains the same. So the activities have traveled, I mean, the channel, and they are now in their new homes, but they are not, I mean, up to the standards yet. You mentioned the desk mapping exercise, and now I think we have ensured having a common supervisory approach to all incoming banks. But of course, we need to really tell the banks, we are doing that they have still a lot to do in terms of efforts to guarantee that, I mean, they are really established in our jurisdiction, they have an adequate risk management, they have an adequate governance, they are not empty shells. Indeed, I think there is a big work to do here and room for improvement. And in this respect, we are now contacting, well, the SSM is contacting all the banks, the JSTs, the joint supervisory teams, are really discussing with the banks why they haven't met our expectations, because the expectations were already very clear, black and white, and of course, I mean, they haven't met totally our expectations. So in the coming months or next year, we will see, I think, improvements in that front.
As I said before, I encourage participants in the audience to ask questions. I don't have questions pending online, but do we have questions in the room? It's the right moment if you have any questions for our panelists. Yes, please. Can we have a microphone on the first rank, please?
Oui, merci. Hi, my name is André Sapir. I work for the European Investment Bank. I would have a quick question to you, Andrea. If you speak to counterparts, let's say in Hong Kong or Singapore or New York, how is it for market participants? Do they perceive these questions we have as basically settled, as a new equilibrium? Sort of, you spoke about the relocation that has happened pretty much in line with the expectations that you have had. So from the outside, is it finalized, or do you expect some more changes in the near future? You have mentioned the clearing issue, and I think the Commission will present a proposal by the end of the year. But are there other, let's say, details of, let's say, the post-trading environment, etc., where you think something will still happen? And so these are kind of the two parts of my question. Is it really still complete? And first of all, how do international markets look at our kind of EU-centric question? Thank you very much.
Well, that's a very difficult question, because I think it very much depends also on what the regulators will do, not only in the EU. I mean, we've been discussing the Commission attitude and the member states, but also in other markets, especially, for example, in the UK, as Alexandra mentioned, is still adopting EU legislation, but it's quite likely that things will change in the near future. So that, I mean, at the end of the day, historically, regulation has always driven, changes in the market, innovations, and so on. I very much see a couple of trends which will affect the industry in the future. One is very simple, and we all know, and it's digitalization. So I think that personally, I see the role of regulated markets, exchanges, diminishing over time. And we can see that now. We see a number of delistings already. We see and that is paralleled on the investment side by a growing share of illiquid investments, illiquid markets, talking about private equity, venture capital. So companies in the future will more and more raise their funding needs in illiquid markets, and investors at the same time will move more and more gradually to alternatives, which typically offer higher return opportunities. So you asked whether I see more relocation, say, to other centers. Well, first, let me say that it has already happened. I mean, the relocation has not only been to Frankfurt, Amsterdam, Dublin, and so on. It has also been to New York, Hong Kong, and so on, partly. But to be frank, I see, I may be wrong, but I see location less and less important in the future. We have direct listing through disintermediation, and we have more and more illiquid markets. So I think this will characterize both asset owners and issuers in the future. And the other trend that I see very much, which is consistent with what Alexander was saying, is the one concerning green finance, or if you want, sustainable finance, which is going to become more and more relevant. Here, for example, I think the EU has a kind of leadership role. There have been a number of institutions that have played a very significant, by the way, the European Investment Bank has been playing a very significant role in the last few years in this area. And I must say the insurance industry in Europe is very much at the forefront. We at Generali, but the other large insurance companies in Europe, are doing more and more in this respect with very significant commitments in terms of zero. There is a zero net insurance alliance, a zero net asset owner alliance with very specific targets in time. So I think these two trends will very much characterize futures of evolutions in the financial markets. Then, whether I see New York or London or taking a larger share, that's very difficult for me to say. It will depend on so many things that I'm sorry, I'm not really able to answer the question.
I'm intrigued by one thing you said, which is location is less and less relevant, and in a way that sounds obvious because we have all those technologies, and now most of us have learned how to use Zoom, even so we still struggle. But at the same time, we have all this dynamic of fragmentation, we have geopolitics, we have China. So maybe let me focus on China. Do you see China integrating into global financial system or withdrawing from the global financial system? I know there are, you can look at it both ways, so what's your view?
That's another very difficult question. First of all, I think location is becoming less and less relevant, in my view, for large players, okay, that have access to the global financial markets, okay? Clearly, when we talk about small investors, when we talk about small issuers, small firms raising funds, of course, location will continue to be relevant. As far as China is concerned, my view is not positive. I mean, unfortunately, I'm rather pessimistic. I'm not saying that this is linked to the current crisis or to Taiwan potentially, but I'm rather pessimistic. I see investors not pushing anymore in that very significant geographic area, but that's very much a personal view. It might be interesting to listen to my colleagues what they think. I'm not particularly optimistic on that respect.
We're reaching the end of our allocated time soon. Let me see if there is one more question in the room, maybe the last one from the audience, and also there's a question online. Please.
Thank you. I'm the Japanese mission there to EU. So recently I arrived here. So the Japanese market is the same the issue. So I think between the Japanese market and the EU market, there's some the same phases. For example, in Japan, in the EU, the banking sector is very dominant. And as well in Japan. On the other hand, the bond market very weak compared to the stock market. For example, the EU they have a goal, strong goal. For example, sustainable finance or green finance. And therefore, for these the markets, the secondary market in the secondary in the bond market is a very very important issue. For example, the DG FISMA they have a strong leadership. To development the primary market, it's probably it is possible. But for the customer base. The secondary market or the liquidity are very, very important. So I think if the FISMA they can make a target for the secondary market or the liquidity, I think it is have a good effect. So how do you think?
And I should mention here's a work by my colleague Rebecca Christie at Bruegel, who is here in the room, who has been writing and commenting a lot on these issues of primary versus secondary market and how to increase a market where things are really traded. So, Alexandra, this is for you.
Now, when I tried to sketch it already a little bit out, responding to Nicolas' question. I think in general, what we have started in our road to a more climate neutral, environmental, sustainable way should go both ways. I mean, for the corporate sector, for the financial sector, in a way that in the end, because you need both sides, you know. I mean, there is a bit this concern that we are asking the financial sector a lot of things, but we need the corporate sector to develop. Maybe this has started a bit in a way that we were a bit quicker on the legislation on the financial sector, but we are now coming with a lot of rules. We have now the corporate sustainable reporting directive. This will also come with a lot of detailed standards. So I think this is a process that will go on, and I must say there's a lot of interest, and as you said, of course, in the European Union, but also in other jurisdictions. So on that point, I must say I'm quite positive.
There's another question from the audience, which I will read and not try to interpret. Will Truss approach, I guess that refers to Liz Truss, to the EU Northern Ireland Protocol fuel relocation of euro derivatives clearing from London to the bloc?
So what, please?
Will Liz Truss approach to the Northern Ireland Protocol fuel relocation of euro derivatives clearing from London to the EU?
Well, I think when we have a very clear position on the protocol, where we feel that pacta sunt servanda, so and we hope that the UK will also adhere to these general principles.
We're already past our time and the light was cut, so maybe that's a signal from the organizing team. No, we're back on screen at least. That we should wrap up, but let me do a last, as they say, lightning round of questions. To the three of you in the reverse order of departure. Basically, you know, what is it that we should have discussed in these panels that we didn't? Andrea?
Sorry, what is?
What is it that we should have discussed in these panels that we didn't?
That we didn't. I guess we touched really many points, so we discussed really a lot. Maybe a bit more on all the issue of sustainable finance and green finance, which is so relevant in our times, but but I think the commitment is there on all our sides, on the EU, on the regulators, on the market participants, so we'll all continue to do our best.
Margarita, what did we miss?
Well, I think we've discussed a lot of topics. We've touched upon maybe all of them, but maybe just one reflection, additional reflection. This is not a zero-sum game. So as you mentioned, and after one of the questions of the audience, there are other, competitors here in the landscape at global level. So we need to also mirror them and also, cope with them. But first of all, we need to solve our own problems.
Alexandra, you have the last word.
Thank you very much. I think within 1 hour we touched on a lot of topics. I don't really see a big topic that we have missed. Maybe we could have discussed a bit more the new proposals the Commission has made on Solvency II. It was mentioned, and maybe also the banking package. Just to exchange views, what is useful or not, but I think I know more is your position on that. But all in all, I think it was a very productive and very interesting discussion.
Thanks very much to the panelists, particularly for having come in person. I know some of you had to adjust your travel schedule, so we're very grateful for that. And thanks to the audience for the engagement, and I think we now have deserved our coffee break. The panels restart at 10:45. Thanks very much for attending the Bruegel annual meeting.